Hello everyone, this is Fotis from Fotis Trading Academy, and in this video I'm going to show you how to use a professional level trading platform such as the Quantower. So let me go to the chart. The point of this presentation is to show you how to do the analysis, how to find accurately entry and exit points, and overall how to start analyzing the markets and trade like a true professional. In previous videos, I have showed you how to analyze the markets, finding support and resistance, and how to find optimal trading levels. For example, this is, what is it? It is a one daily chart for one of the most popular, and I think it is the most liquid futures contract, which is the S&P E-mini. So this is very liquid, very deep when it comes to liquidity contract. And I'm going to show you how we do the analysis, whether it is the S&P, whether it is the euro, whether it is a bond instrument. It doesn't really matter. The process is the same. So what you do is you need to begin with a higher time level. So you start doing a top-down analysis. So you open your chart, of course, you have daily bars. I have loaded up quite a few history, so I can see accurately the trend lines and everything. So what do I notice? Number one, trend line. So this is from the beginning, I think, of 22. I'm doing the trend line. How do we draw the trend line? Well, basically, you pick up the point, you expand, and you bring it closer to the price, and you stop when you have found the first low. So whether you like it or not, this is the correct way, this is the official way, this is the trend line. If you start from this area, so this is from March 23, you click on this point here on the low, you expand the trend line, and you move up until you find the first point, which is up there. If you were using this point, that's your trend line, but you can use as the reference, considering if you were here, if it was early September 23 and this price action hadn't happened yet, well, then this is your trend line that you use as a reference. And the most important thing is to notice a series of higher highs and higher lows, or lower highs and lower lows. Why? Because this defines the trend. Sorry, let me get rid of this. This defines the trend. A trend is a series of higher highs and lower lows. Right now, what do we see? But we have a series of higher highs and lower lows. One high, two, three highs. So we start having a lower trend. So we have the trend lines to use as a reference regarding the trend, but where are the optimal support and resistance levels? So we can click over there, we can use a rectangle. So over here, I can use this. This is my resistance because it is a previous local low. I think if we apply the Fibonacci, we might have a confluence over there. When it comes to this level, I'm going to use this swing low to this swing high to see potentially if we have a Fibonacci level. So I will use a Fibonacci retracement, and I'm doing this. So now I know that we have a 50% here. This is why the buyers stepped in. We have a correction, but also if I do it the other way, I notice that we have a resistance. We have a confluence of resistance right at this level. So we have price resistance because this is a previous local low, and we also have the 50% Fibo. Why are we doing this? We are not doing this. We are not using technical analysis to tell us what to do next. We use technical analysis to tell us where are the optimal entry levels and to define our entry exit points, and then calculate our reward and risk. If you wanted, for example, to sell, if you decided to sell the S&P, of course you do it as closer to resistance as possible. This is the way we do it. And what is your target? Potentially this low over here, the previous low, or this trend line could be your target. So you can calculate your risk reward. Your stop, for example, in this case, it would be above outside the trend line. Because if it breaks above the trend line, then we have a change in the structure. So this is the traditional way it is done, using support and resistance and trend lines. And potentially, of course, you can use also technical indicators to confirm your thoughts and your analysis, but we are not going to discuss this so much right now. Instead, I'm going to show you another approach, but it is used extensively at hedge funds and from professional traders. And this is the volume profile or market profile and order flow analysis. So this is again the same chart, but it is the 4-hour. So it is the S&P chart, the E-mini, but it is the 4-hour interval. And you can see we have some volume histograms on the left and on the right. What do we see on the left? On the left, we see, as you can see here, the current month and the previous month. On the right, we have the current week and the previous week. And you see also some horizontal white lines at each histogram. What is this? This represents the value area. The value area is the 70% of the volume area where action happens. It is the 70% of the area with the highest concentration of volumes. And this is the area that we are doing business. This is where we define our entry and exit levels, our high and lower levels. If I move to an even smaller time frame, you will see what I mean. So let me move to a 2-hour interval. Where is our entry level? Do you remember from the previous analysis on the daily that we said roughly in this area, we are expecting some resistance? So you do the analysis and you say, oh, well, over here we are expecting some resistance. Then I'm going back to the 2-hour, and I have also overlaid the daily market profile. And what do we notice? Do you notice something over here? What is this level? 4,418.50. This is an important level. This is a very important level. What is it? This is the value area high on a weekly level, and it is the value area high on a monthly level. And we see the price is reaching this level, and straight away, the sellers are stepping in. This is based on auction market theory. The sellers are having an advantage to do business in this area based on the principles of auction market theory. And we know beforehand, this is not a repainting indicator. We know beforehand that in this area, it is very likely, based on probabilities, that they are going to show up and try to drive the prices lower. To make things worse for the bulls right now, we have broken outside the weekly value area low. So this has the potential to move even further lower. It has a potential to gain momentum and to move even lower. There is another angle. Let's say that you didn't catch this move for whatever reason. You now know the areas where you can get in again and do business. What is this area? Right there. The value area low is now becoming resistance. Would you like even more clarity? You can even break it down in a 3-minute chart. For example, this is again the S&P. And I have a Heikin-Ashi applied on the 3-minute. Do you think it is a fluke, it is random, where action happens? Well, now this is the European session. You can see the volumes are very thin. Here we use order flow. And let me go over here to see the trend. We have a trend to the downside. Where do the buyers appear? The buyers appear right there at resistance, at the VWAP. What is the VWAP? Volume weighted average price. And you see that every time we hit the VWAP, what happens? You see, for example, here we had strong volumes, buyers step in. For whatever reason, we are not examining this right now. So the buyers are stepping in. We can see here the delta rotation from negative delta to positive delta. And look that we have positive delta meaning that the buyers are outnumbering the sellers. And we see this here. So we have one green Heiken Ashi, and you move in the direction of the trend. This is a good area to do business. We are in the second standard deviation of the VWAP. But here you take your profits. We take profits and we have quite some time to do business again. And what is the trigger? You wait, potentially this is an important area because we have a VWAP. And look at this, negative Heiken Ashi, negative Heiken Ashi. The delta rotation is turning negative. Delta is turning negative. Ladies and gentlemen, this is 10 points right here. We have 10 points. 1 point is $50. This is $500 just with one contract. If you do 10 contracts, this is $5,000 right there. And the action is happening at certain levels. For example, resistance, second standard deviation of VWAP. Look at here. Let me do this so you can see better. Let me sort out the chart. This is an area that we identified previously as important. I can see the sellers coming in. So can you see that I am not randomly picking the levels where I'm doing business? I can see that right here, what is going on? Negative delta, negative rotation, sellers, are stepping in. I can do this all day long. The levels are not random. Here I can see an expansion of range, and it works both ways. It works to the downside and the upside. In this case, positive delta, positive rotation, and you go with the flow. You don't know what is going to happen. You don't know if this is going to be a big move that will give you 10 plus points, or you will make 2-4 points and you will exit. My goal is that initially to make at least double the reward than what I risk. So potentially I go between 2 to 4 points. So I'm going to full 2 or full 8 points. So I'm using increments of 2s, 2, 4, 8, something like this. But there are events, there are fundamentals happening that will give me a very big move. So this is where I'm taking some profits, and then I'm allowing the rest to run, and potentially I can get 10 points, 15 points when we have a day with a very strong trend. So this is how I do it. So I remain safe. I am not risking anything, but I have a position and I allow this to grow. So can you see how we moved from daily analysis, identifying the important levels, then I am moving to volume histogram and I'm identifying the value areas. And if I want even more clarity, I move to something like this. I'm moving to the order flow. So I hope with this session, I have showed you how to do the analysis at a professional level, and I have given you an incentive to research this further and use the tremendous capabilities that this platform is having. Thank you for watching. I'm going to see you in the next session.